Okay, we are back. July 7th. Mike and Jerry, once again, I think this is episode 10, I believe. Jerry, how are
I
you?
was surprised by that. Yeah, I was surprised that we had done so many. I didn't think it was that many. How many of them are on YouTube, though? Oh,
Mmm,
sorry.
hard
Weird
to
question.
hard to say right now. I think a few. Uh,
Four?
Under five. I say under five. So
I'll
I got to
call.
do that, everybody. I'm sorry about that.
Yeah, my buddy
Look, we've been
Oleg.
really busy with this new ETF, with Jerry's new ETF. A lot of work. Got a whole other project going on at the same time as well. So Mikey's been a little stretched lately.
Mhm.
Um, and yeah, so I'm very sorry to the people who are YouTube advocates, YouTube watchers and listeners. I'm going to commit to doing it before the end of the weekend. How about that? Get them all
Oh,
on
good.
there.
Well,
Get them all on there. Have
don't
them
sla
all.
don't slack off on your other projects. But yeah,
No, I won't.
yeah, yeah.
Um,
YouTube's great because it has the AI generated or whatever transcript, and people want to get verbatim my quotes, and I have fans who want my quotes, and that's something we can get them is
okay. Yeah, I
I
understand.
tried to use Siri or something like Siri. It's very difficult uh, to create your own like little transcript, but yeah, I like to tweet podcast quotes myself. YouTube is pretty wonderful.
Yeah, I think it's too bad Spotify doesn't have that yet, only with songs, only song lyrics. No Spotify.
Yeah, yeah. You're probably very familiar with all the problems with Spotify.
Yeah, you tell me about all of them. Yeah. My wife works at Spotify for the record, everybody. So he's always
Oh,
telling
there
me,
you
"Hey,
go.
tell your wife to tell somebody to fix this."
That's right. Yeah, yeah.
That's funny.
Well,
Uh,
Spotify, I pick on companies that are almost perfect. The worst, I got a call the other day about a friend of mine was working for LinkedIn or a firm that was doing some surveys for LinkedIn, and it is just the worst app ever. Not like Facebook is pretty awesome, Twitter is amazing, and it's just like LinkedIn doesn't give a crap about your experience on their app. And so I was like, screw it, I'm not going to help you. I'm
yeah,
not going to do anything. But you get something so close to perfection like Spotify is. I feel like
yeah. I
really.
can't live without it. I can't. I mean, I'm
Mm-mm.
big music. Uh, Music is very integral to my life. Whenever I get my ear end wrapped, um, story sort of thing. You ever watch yours, where you get all your stats on what artists you listen to the most and all things like that?
I don't remember if I've gotten in that deep. I might have, but it's not something I use obviously very often.
All right, because
But
they
yeah,
will
it's
send it
pretty
to you.
amazing.
They either email it to you or they pop it up at the end of the year on the app itself. Um, but I'm always for like a handful of artists, I'm always in the top 0.5% of listeners on time listened to that music throughout the year. Like, and
Mm.
I don't know how many minutes. It's like tens of thousands of minutes that I listen to Spotify throughout the year, just with music. Doesn't even include podcasts. So
Wow,
I just got that thing
that's
running
amazing.
all the time, all the time.
Hmm. I'd be like that with TikTok probably.
Oh God,
Embarrassing to say, but yeah. But I will say YouTube Music is out there, and I get YouTube Music because I subscribe to YouTube Premium service, which is really nice too. You can um, leave the app, leave it open, but go on to do something else, and you still can listen. And so the premium is pretty sweet, and they give me the music for free. So tell all your Spotify friends that they better be on the lookout for YouTube, Google's coming after that. It's a good
coming after
business.
YouTube. It's gonna be like Google Plus, where they tried to come after Twitter or Facebook, and that went. The best
Yeah,
Google product of all time, though, was Google Reader. You ever use Google Reader?
I don't think so.
Whoo! Man, it was just an RSS feed where you could, splice up your all your publications and blogs um, into one spot and organize them, and you're gonna get the new posts and articles automatically feed into this thing without you having to go to, say, Wall Street Journal website, or go to you know uh, Bloomberg, whatever else you want to read. You like to follow this guy as a blogger. I know you like what's his name, Morgan Housel. You could you just feed it right into this site. You don't have to go to his blog and follow him on Twitter. You could just every time he writes something and posts it, it just goes right to that site. So you just watch one site. So it's a way just to consolidate your time. I loved it. Then they stopped it. I don't know why. And probably weren't making any money, but that was a shame. And then there's a bunch of people who have copycatted, and I use Feedly now. But yeah, those Google Reader days were wonderful.
Hmm.
Surprised you never
Yeah,
used it. It was
I
incredible.
don't think I did. Yeah.
Yeah, it was
Hmm.
it was great. Yeah, they stopped it. All right, they closed it on July 2013. It only ran for 8 years. I used it a ton
Hmm.
when I was at Bear Stearns, and I had to read all this stuff all the time about healthcare stocks and healthcare industry and yada yada yada. It's like no way could you just be clicking all around all the time looking at articles. It just took way too long. But it's too bad.
I
Too
signed
bad
up
they.
for Meta Threads, the big competitor
Oh boy.
to Twitter,
Yeah.
supposedly. It doesn't look that great.
No.
Someone told me this morning they signed up 70 million people. It doesn't look it looks very bare bones. I couldn't make too much of it. My first tweet was, my first thread was yesterday where I posted uh, about my Twitter spaces. How
Mm,
about that?
wow.
I'm trying to come to Twitter. I posted to thread people, come to Twitter 8 o'clock Friday morning to listen to my Twitter spaces. So kind of, kind of funny. I know that if I'd have done the opposite, Elon would have kicked me off Twitter or
Yeah.
punished me in some way, but I didn't see any punishment from Thread. Uh, what's going on in the markets? What are you interested in? Short
Well,
interest rates look pretty fun.
oh, it's just a
Short
gift that
short
keeps on
bonds.
giving. I
Mhm.
We at least in June, yeah, no trades in July, I don't believe, yet in interest rates, but yeah, added back some of those shorts that it took off during that rally, and now they're going, interest rates are going back up again, so getting short the bond futures again, and it's just it's just beautiful. This is one of those where the market is telling a different story than the people involved in this business, the people on TV, or just keep waiting. This can't be sustainable. Inflation's coming down. Why they don't need to be up so high? Yada yada yada. We're on the brink of a recession. What's the Fed doing? They're going to start lowering soon. Yep, yep, yep. Well, the play is short, and
I was
I like
I
that
was
story.
reading. Yeah, I was reading on. Yeah, I know. I was talking about these. It'd been kind of sideways for a long time, and they rallied like crazy in March. And I was like, yeah, I
Yep.
guess some of these trades were pretty good. Maybe there's a couple outliers. Oops, they're not over. And so I
Nope.
stayed mostly, almost all short. Got out of a couple, but a couple systems and a couple of the markets, and it was in. But long-term loose pants systems kept us right in there pretty well. Um, and they may keep going. Who knows? But Um, that was a really fun trade and still is, and just shows you the benefits of sitting through vol and massive profit give back, only to wait a while and get it all back. It doesn't look. If the computer told us that it didn't work like that enough times, we wouldn't do it. We would just say, "Well, you're not supposed to have these long-term
No.
exits. You should have just short-term," and we would just go ahead and. But it doesn't say that. It says be long-term. I was reading on Twitter the other day where somebody was proposing some sort of trading strategy um, about these interest rates, and just matter of factly saying in their tweet, um, this is how I'm going to take advantage of the Fed's error. Oh, okay. So it's just ipso facto an error. Like you said, the market doesn't believe in these high interest rates, and they don't want them, and shouldn't happen. And so Fed's made an error. Like, not sure if they made an error. They may have made an error. What should I do? And it's just so much better to be a trend follower and not have that sort of mentality.
It's a risky, to me, I don't like it. I don't like that. Uh, I don't like coming to a decision based on that logic. Uh-oh, they're the dogs. Those are Jerry's dogs, not mine. Um, because and then also using it as, say, a pitch, uh, marketing and sales strategy to attract investors to your fund or whatever, that is, it's something that you might be more inclined to, you say you'd be less inclined to change your mind, um, because you've voiced this out, you've thought this out, they've made an error. How do you know they've made an error? What's the error? How do you measure the error? How do you know when they've stopped? How do you know when they've corrected the error? Uh, will there be a delay when you'll find out? Like, they may have stopped the error now, but then you don't you don't see it happening. You don't see it reflective in the markets just yet. So yeah, all right, they fixed the error. So that's why the the narrative, the delay, and it being inconsistent with what the market's doing, to me, is very risky. And then you have your own psychological entanglement in this, and that you may not be even seeing straight. You're not able to see straight and think straight when you've you've believed this, that they've made an error. Uh, I don't know. I don't know if they've made an error or not. I'm sure we, as trend traders who care only about the market, we've made money from people making errors and people making great decisions. So who cares about the error? As long as the thing moves, uh, that's all we're focused on. Um, and right
Well,
now, 10-year Treasury, just looking at one market, I mean, the future's making new lows now.
yeah, maybe they are making an error that you can just profit from. And then when the market agrees that it's an error, you switch the position, you follow the trend. And what's the downside? The downside is this small, small loss that, okay, I stuck with the trend. Everybody else was
Right, the
smarter than
downside.
me this
Yeah,
time. Yeah, the downside is I'm going to take a small loss and I'll reverse my position. I didn't buy the low, and that's a lot of what people are trying to do. They just the attraction to buying these lows is just so. And the longer they just chopped around, we didn't get out. They didn't make a new low. We just sat there bored to death for months. Just the attraction to get in there and to rely upon, well, that trend's over. Even when we reverse positions on trends, I never say, well, that trend's over. No, I'm kind of expecting like corn and wheat to be
yeah,
short, to get back long, and then to watch that collapse and get out of the long and pretty close to going short wheat again. I mean, corn,
yeah,
short, long,
yeah.
short again, and you're just like, yeah, I'm expecting bad stuff. I mean, I'm expecting, I'm not going to be surprised. I have no confidence in my systems to be right very often and not put myself in situations that are so ridiculous. I defend it, but it's going to also put me in situations where the trend is going to make a lot of money. And all I got
Yeah,
to do is not be too quick getting out.
yeah. That reminds me of the tweet I believe that Seth put out and that Clint retweeted and tagged us in, asking us why people can't trend follow or can't hold on to winners, or can't cut the loss quickly. It was something like that. Something in that vein, and that yeah, the corn. It was about corn, but that it reminds me that 'cause I responded to it and I thought, yeah, because you care too much about corn, you know, your bet is too big or your emotional bet is too big. You've why do you care so much about corn? You know, what's special about it? It's just one opportunity set. It's one market, one opportunity to make some money. So getting so in love with corn, yeah, and you know, we had I think all within a matter of a couple of months, we were short. I think we were short as of maybe May. No, I can't. Yeah, maybe May. We got short, and then we were long in June, and now it's back short in late June, and now July. So those are the things, yes, from especially as a trend trader and with your experience, and as I'm getting more, you're like, oh yeah, well, yeah, that shit can happen. No problem. You know, it's not really a big deal. But if it's something, if you're new to this, that's, or you're not even thinking about the possibility of it, then it can really throw you and take you off your game. But meanwhile, we're like, we're ready for it way before. So, and then we know, oh yeah, well, that's why you don't bet a whole lot because something like that can happen and one trade knocks you around and kills you. That's kind of silly, you know. Maybe not be a great system to hang with long term. It might be really hard to stick with long term. Um, but yeah, man, that was
I was having this political debate with my friend many years ago about China, and we were trying to like debate about China, and China's bad place, they're not nice, they're like dictators, and I would say like, do you know what happened in China recently? And just to make this point about how crazy China was, and he said, look, dude, if you could say you could come up with anything, and it's happened in China. Everything under the sun has happened in China. It's a lot of people.
all right.
It's and if
Long
it's going to
history
happen, it's
too.
going to yeah,
Yeah,
it has happened in China. So all you're saying is not it's unusual and evidence that China is a bad place. It's just that it's a lot of people there, and it's the same with the markets. I mean,
mm,
uh, if you have, it's anything can happen. Can you believe? Yes, I can believe because it's the markets, and well, we've never seen it in the back test. It doesn't matter. Uh,
yeah,
you can see 10 losing trades in a row. That's why I try to minimize falling in love with this back test and the distribution of the trades, the equity curve. What's it look like in the past? It could be a lot different in the future, although in the future the average trade is about the same, the average win, the average loss, the win percentage maybe maintain similar characteristics in the future, but the equity curve is going to be all over the place. You're going to have Trump, you're going to have crypto, you can have
yep,
AI, and it's going to really look different in the in the future. We rely upon the past, but we know to decide how we're going to trade, but we know the future is going to look different. So you need to figure that out, or you're going to be in
yeah. I
trouble.
think it uh, reminds me of you know we've had markets. I think we have data on markets technically, you know, not great data and not a lot of markets, but we technically have them. I think going back, I think some of those papers, those longest papers, at least those trend following papers, going back, you know, 500 plus years. That's a totally different society 500 years ago. How much data do we have in general? How fast did it even travel? You know, we had ships. old wooden sailing ships, uh, and information just took a long time to get across the world, and get across town, get across the country, yada yada yada. And now it's happening all the time. It's happening instantaneously, and but we still get moves. We still get things happening. We still get things that are repeating themselves. We still get new patterns. There were new patterns then with no data traveling slow. We get new patterns now with lots of data traveling faster than light, almost it feels like. So
And the
it's
market's
just,
reacting
yeah.
to this data,
Hmm.
and like March, and sometimes it's a false reaction. Let's all
Yeah,
switch positions in these bonds. Now they're going to go higher because of this bank problem, and maybe, and we got lucky
maybe.
not getting bounced out. It was close, but some of this rapid information we get, it devalues, and it's mixed in with good information is mixed in with bad information. So I don't think it really helps a great deal. It's certainly, I haven't seen, if anything, it's made the markets a bit choppier. We go from A to Z in a big trend, and it's not smooth any longer. So you just have
Yeah,
your
I think,
trailing stops
yeah,
further away. But it's not like this new information moves us from A to Z at a quicker pace, because so much information coming out so fast, no one knows what to believe. And
that's
AI
right, right.
picks up on false information. I guess there was a false something happened a few weeks ago, and all these computers reacted to it, and it was like, oops, it was a prank. It was a joke. You shouldn't have reacted to that.
Right.
So yeah,
It's yeah, I think
I
it's
love
like a
AI,
logical.
especially
Yeah, go ahead.
I love AI, especially if you put, if the last step is it an upside breakout? Then you go long after your AI has identified a good trade, but I think you should always wait for the breakout. So forget AI because
Yeah,
AI needs
yeah,
to beat the breakouts.
right. It won't. It won't. Yeah, I think it's a logical fallacy. Like you think, oh yeah, all the information, it must be so the markets are going to find the right price much faster. Um, yeah, but now that there's more information, there's a lot of fake information too, and the skill is still there to find out what's real, what's not, uh, to think slow, um, and not overextend yourself. All these like basic, I think, good decision making principles, good business principles are still in effect. It's not like, how are you adapting to the new world of new information? It's like, these skills are still relevant, because you have to trust what information you're getting. And I don't know, it's just like, I feel bad for the people who get swept up in all this stuff because I'm sitting here like cool as a clam, just waiting for these fucking breakouts. Like, I got all the information I need. Like, you guys knock yourselves out and make yourselves nuts, turning yourselves into pretzels, trying to figure it all out. But remember, after you figure it all out, you still got to go with the trend anyway. So you might as well just do that. It's yeah, um,
Yeah, I think Google had this mission. I just Googled it. It says Google's mission is to organize the world's information and make it universally accessible and useful. And I think that's what bar chart does. It you put a couple breakouts up on a chart.
yep,
It organizes the market's information and makes it accessible and useful, and it kind of gives you this plan. I mean, I think that, and if you're not looking at things based upon trends and systematic, you get very confused on what to do next in your
yeah,
portfolio. I've seen people after some of these big stock crashes just come to my office and go, I have no idea what I should be doing now. I'm like, yeah, well, I don't really know what's going to happen in the future, but I do think you probably want to start diversifying and getting in gear with the trends and be in the habit of taking small losses and letting the good trades go as long as they will. Um, and it's just that worldview that keeps you kind of sane. And you need to replace results. as your benchmark with following your rules as your benchmark, that's going to keep you way more sane as
Yeah,
well.
yeah. You gotta marry your system, um, date your positions, as they say. Um,
Mm.
this could be a good, well, to preview maybe for next week, because we gotta hop off here soon. Uh, but I go through these periods where I rewatch a lot of documentaries, and I was watching the Enron one the other day. I was watching the Paul Tudor Jones one the other day, uh, and a couple of new ones, but not necessarily market related, but like that Fire Festival one, that Theranos one. Because I love watching them 1,000 times and like just studying kind of the people and the trying to like reimagine myself back in those days, maybe in that situation. Um, and what because this is why we needed one for you. We needed to see inside the walls of not necessarily the turtle experiment. It could have just been with you in 1988 through 1990, 91 or something like that. Um, to see you going through your ups and downs um, and just how you were on a day to day. That I think was like it's that I learned more from that stuff than something curated on like a highlight video. Like I want to just see you moving in real time, um, and thinking and reacting and talking in real time. Um, but is there, and I'm watching the Paul Tudor Jones one, and uh, I just get like I just thought, I wonder what Jerry was like back in those days. Is he different now? Because I remember I listened to you on Covell talking about the new ETF, and I think he was talking about 1993 was a big year for you, and they put you on the magazine cover, and it was you probably like around my age or even younger, like probably mid 30s or something like back then. But like now, if you see those things, what do you think? Is that like, do you see yourself at like, do you even recognize that guy back then? Like, you know what I'm saying? What are your
I
thoughts?
don't like. I don't go back and look at those things. I don't even listen to
I know, but people
podcasts.
must
I'll never
present them to
listen.
you and bring them up because they want to talk about it.
Now,
Like,
what I do think about though is what I'm thinking now and remembering how I was thinking then.
oh, ha, ha,
So
here we go.
yeah, I think about myself then and now, and yeah, and the mistakes I've made over the years, a bit in trading, a lot in business, because it's kind of a business, and I
Yeah,
tell you about my mistakes and how you should and what I should have done differently, and you should. We spent time before this. I was telling you, how
yeah.
to what I would do if I was you and I was your age and do it over again. But um, so I think this is going to disappoint you. This is going to extremely disappoint you
You don't
when I
know.
when I
You
give
don't
you
know
my
that.
answer. Yeah, it's not a good answer. Not interesting.
Okay.
It's the same old, and that is I just know how much money I did not make because I didn't follow the original rules. That's right, the original rules. Yeah, I
Yeah.
didn't follow them because I'm a weak human. I didn't follow them because I tried to improve them a bit, and that was a backfire on the improvement part.
Mm,
Um,
mm,
so, and let's say in the late '90s, I decided, oh yeah, I see that I think I should trade longer term. Okay, that was good. So you could say, well,
yeah.
you didn't follow that, and that worked out well. That's right. That was the one or two or three things. Oh, adding a lot of markets. Now, I've added a lot of markets, and I think that's really good. I didn't add them fast enough. I just talked about it and didn't go crazy. And one of the things I should have done, I don't know if I've ever told you this, but I was having anxiety at times, and I knew I wasn't maximizing what I could become and be. And so I finally realized early on what I should do is not classify myself as like a strict CTA, but start trading.
Mm,
Um, I had a lot of clients and a lot of AUM, but start the business over. Do what I'm doing now, which was a lot of stocks,
mm.
all the markets you could possibly find, but the classic trend following. But then I'm thinking, oh, I've got too much to lose. I have these clients. It's a kind of a crappy business. It's managed futures. It stinks. It's not putting the best foot forward with trend following with what we're going to do in this ETF, which is lots of futures, lots of currencies, commodities, interest rates, 150 stocks,
Yep.
just maximizing the potential for trend following. I should have done this 20 years ago. I knew to do it. Is I had too much to lose. Now, um, it's more of a
Well,
situation
that
where
I want to
it's a good
stop you for a
idea.
sec. Yeah,
Yeah.
I just want to stop you for a sec because yeah, watching that, watching Paul and watching Peter Borish just operate on a daily basis, but especially Paul, you you never think to yourself, what's this guy's strategy? I wonder I wonder what his rules are. It's just two guys trying to make a fucking boatload of money. That's it. That's it.
That's
That's all they're
right.
trying to do. Like very
That's
simple
right.
business.
Yeah.
You you know,
Mhm.
like what do you think we're here for? We're not, um, and he's very aggressive, very straightforward, was very put together at early 30s, at least in that video. Um, and I think, yeah, I think at least the CTAs and maybe yourselves too. You got caught up in the emergence of the industry, and then you're kind of bound by what you have to be, what you have to look like and sound like as someone in this industry. Like, whoa, your industry is trying to make a lot of money, you know, and do it
That's
responsibly and do it
exactly right.
sustainably, like,
That's
yeah,
exactly right.
yeah,
Yeah, and you could see that guy was a free man. He had a lot of good information. He's a smart guy. He probably had
hmm
a bit of trend in him, and now he has a lot more trend in him. But he wasn't
yes,
bound by like we were. We were like, especially the turtles and me, we were like, you have this opportunity, you had this knowledge, you've got to use it. You're not going to, I personally could not say, well, that was great knowledge. I'm going to mix this in with more discretion and stocks and fundamentals a little bit and be more just trying to make a buck and not let trend get in my way. I think this market's
all right,
overdone. Let's just get out. And you were like, no, anytime I would deviate from the system, I would probably lose money, feel really guilty, double down on, I'm never going to do that again. And so I didn't
yeah,
have the freedom, for me to go out and trade equities. That was radical. Everybody in the industry is telling you that is not what we do. Do not do this. We're going to not give you money. Uh, not, and then it evolved into vol management. Well, vol management is part of what we do. Stock indices, vol management. And you're like, well, no, I'm not going to do that either. Well, you're not,
yeah,
then you better get out of this industry. You better get into something else to be known as macro, systematic macro, and jettison all of this because it's just a matter of time before people, um, you're going to pay the price for not being defining yourself better and more accurately. And that was a real mistake. And I don't think you won't make those same mistakes. But definitely, bottom line is
yeah,
um, you'll when you commit yourself to systematic trading, you will remember all the times you kind of blew it, not simply just missing a big trend, getting out too quickly. I mean,
sure.
no
It's
reason to
staring
complicate it
at
more
you
than
right in the
that.
face.
Yeah,
Yeah, right.
yeah, yeah,
All right, I think this is a good spot to pick it up for
yeah.
next time, since
Yep.
we gotta hop here. But
Sounds good.
all right, YouTube family, I will take care of you very soon. This weekend I'll get them all up there. Spotify will be out soon too, and we'll continue this, finish this particular conversation up with some new stuff next week. And anyone, feel free to send us any questions, send us any comments, any topics you may like us to discuss. It could be anything. I don't know how in the weeds we want to get with. Let Jerry still discuss the maybe more in the weeds stuff with regards to trading strategies and rules and stuff like that. But on the spaces on Friday morning. But yeah, anything broad, anything, let us know. And have a lovely weekend.
You too. Take care.
Bye.
Bye.